welcome back to Only Divergences. Here we're taking a strict technical analysis look at stocks, and today, man, we are looking at CCJ Cameco. This is a uranium company. They're also listed in Toronto, but for purposes of this video, we're going to only talk about the New York listing. The stock has been on an absolute tear. We're looking at the monthly here. But let's go here. The March lows, it was at 530, and now it's at $24. But if we take a look at the weekly, actually, is the last 3 weeks, we've seen the stock rise 60%. Now, could it go up 300%? That's the question that we all want to know, right? That's the answer. The answer to that question is what we all want to know, and yes. Yes, it can. I'm going to say this right now. Let's take a look at the long term, look at what we're actually looking at here. So a number of things. First, if you're a technician, this should just stand out to you right away. This is a falling wedge. This is a multi-year falling wedge, started in 2007 and bottomed out here. And the second thing which you really should be paying attention to is the MACD, because we're on the channel Only Divergences. Well, what do we got here? We got a long-term divergence here with uranium, and so we can see, with Cameco, we can see a low here in the MACD, and then a subsequent low in the MACD that's higher than the previous low, indicating that the momentum is shifting. Yet we have price reaching an equal low. So that's really what you're looking at, and this is a 3-4 year bullish divergence on the monthly chart. That's a huge divergence. Right, and so when you have big divergences like that, you can expect big moves. One thing that I want to point out, not a lot of people do use this indicator, the DMI, but it's a great indicator for showing not just overbought and oversold, but also trends. When the black line is high or rising, that means that there is a strong trend. And then the red line indicates a strong bullish trend, green line indicates a strong bearish trend, or you can flip them like this. Well, take a look at where we are right now. We've got elevated red, and we've got black that's rising, similar to this. So that's why I'm saying, I think that, longer term, 300%, absolutely. If you're in this stock, there's going to be volatility along the way. Obviously, we had volatility back here and here and here, but ultimately this does look like there is real potential for this bull market to continue. But what we're here for is to take a look at the near term, and so the near term is providing us with actually some bearish near term intermediate signals. So when we take a look at the weekly, first thing that we want to point out, and again, I'm going to go back to the DMI here, and this is why I like this indicator, because it does show the limits of what you're looking at. Take a look at the DMI where it is right now. We got red up at 4250. Now, all we have to do in order to look at this is and provide ourselves with good probabilities about what could happen with this stock is look what's happened in the past. So you can see that, in the past it's gone a lot higher when it's been on this big bull run. So absolutely, it can move higher. It's done that quite a bit, in fact. But even here, even when we had those bull runs in here, we had weeks where we pulled back. Take a look at these red candles. It wasn't all sunshine all the time, right? And so what happens is when you get this red rising up, the rising of the red is not where you want to go long. It's where red is coming down. That's where you want to enter, because you're going to have these, let me pull up here a little closer. You're going to have these periods where, you buy on the rise, and then what happens? Well, you get 3, 4, 5 weeks of consolidation, 6, in fact. So you want to buy when you're getting tightness in the MACD, not when it's expanding, because when it's expanding, it's already made the move, and then it's going to come down, right? When it's expanding, it's already made the move, it's going to consolidate. So that's what we saw last time. Well, where are we right now? Well, unfortunately, we're at a very strong rising red, and so what that tells us is that the near-term move might have already happened, and I think it did. I mean, the stock has gone up 60% in a matter of weeks. And let's take a look at another thing that's standing out, that should stand out to you as a technician. Excuse me. take a look at, let's just pull this up here. Okay, come on, work with me. This trend line here, this has been overhead resistance with a little exception here, but this has been overhead resistance. And guess what happens every time we hit this resistance? We're also at this DMI high level, right? Take a look, every time we're at this DMI high level. So I'm not saying that Cameco can't go up in the near term. In fact, I think it might even try to touch this thing next week. What I'm saying is that the meat of the move has already happened, and near term, the technicals and timing do not make this to be a favorable place to enter right now if you are a prudent investor. It's approaching this this resistance trend line, although it could scrape on it, and I think that it actually will. But it's a question of how is it going to get there? Is it going to do it through volatility or not? We're extremely overbought on the weekly. Let's take a look at the daily here, actually, just to see how overbought we are on the daily as well. Look at this MACD. It is just reaching limits here, and at the same time, we have this elevated red as well, right? So let's take a look. What happens when red gets elevated like this? Well, you get some pullbacks on the daily. Now, when it pulls back, that's when you can get a nice move higher, but we already had that. We had that pullback. We have move higher. How much higher can it go? Maybe 1 or 2 more days, but that seems to be like that might be it, right? So we're extremely overbought in the near term. The only thing I'll point out is that on the hourly, we're not that too overbought. We've pulled back a little bit, but now we've got, unfortunately, what looks to be a negative divergence. We have a lower high on the momentum indicator with a higher high in price, indicating that this move doesn't have the same level of momentum as this move. So what does that tell us? Unfortunately, there is limited upside immediately, I think. Let's not forget, for those who say, well, what about Friday? We had a big move on Friday. Yeah, 6.5%, that's a big move, and I think intraday got up to 7 or 8. But let's not forget that was after 4 days of consolidation. September 3rd, the stock reached 22.36, and that was the high on September 3rd, and it also hit that level on September 9th. So, some will say that this isn't technically consolidation, but it is, because you have 4 days where it was a little sloppy and choppy, but then it eventually moved higher. Can it move higher? Yes. Is this the most optimal risk-reward entry to go long? The answer is no. So, no one wants to hear this, I know, but the move already happened. This was the move. This was spectacular. Some of the options here that were played perfectly got you north of 30, 40 times returns. And so, yeah, these moves happen. We have to understand that these moves happen, but the question now is, do you go long here? Unfortunately, the answer is not. And I know that if you're in this stock, or if you bought options, you're not going to be happy with me saying this. I get it. I'm sorry. But what I'm trying to do is I'm trying to provide objective analysis. And we're trying to play a very long game here, right? The long game is, what patterns can we identify in these stocks that will allow us to determine what is the most prudent action to take and to not take from a relative perspective, right? If the stock has been rising, that's fantastic. There's some people who will say, well, I got in here and I bought options and it went up. That's true, but let's not forget what happened with Apple this week. It did move up and then it collapsed lower. I'm not saying that this is what's going to happen with this stock, but what I'm saying is that from a risk-reward perspective, this is approaching levels where the upside does look very limited. So what I'm going to do is I'm going to update this in about a week. We'll see what happens with the stock. I hope that everybody makes money, right? But I'm just trying to provide analysis here, and I want it to be as objective as possible. So this is what I see with Cameco. When I see something more, I'll publish that. But as of right now, all I see is that there's a lot of attention about this stock. There's a lot of pressure. People are talking about it. There's a lot of stories going on about what's happening with Sprott, and the purchase of physical uranium, and how this could be a short squeeze, sort of infinite loop rally thing here. Let's not get too caught up in the narrative. In fact, let's ignore the narrative completely and let's just look at the technicals. And what the technicals say is that there's likely limited upside, material upside from here. We want to be very careful with how we approach stocks like this. So I'll update this in a week and we'll see what happens. Take care.